And in her first congressional testimony in front of the House Financial Services Committee, as Fed Chairman Janet Yellen will signal that she will continue largely in the policy footsteps of Ben Bernanke as she testifies this morning at 10 o'clock. She will say in her testimony that if the Fed's economic forecast holds up, she and her colleagues will continue to scale back their bond buying program in measured steps. She will also signal that interest rates aren't going up anytime soon because the recovery of labor markets, in her words, is far from complete, and the Fed is keeping an eye on the recent turmoil in global financial markets. But right now, she does not believe that it poses a substantial risk to the U.S. economy. She will again open by praising Ben Bernanke's service at the Federal Reserve, saying that his handling of the economy was skillful, and she will pledge to continue his work, saying, "I expect a great deal of continuity in the FOMC's approach to monetary policy." She signals that, again, the tapering of the bond buying program will continue despite the recent weakness that we saw in the jobs reports, weaker than expected, repeating language in that last Fed statement, again, about the expectation that if the Fed's forecast holds up, then the asset purchases will continue in further measured steps at future meetings. That said, purchases are not on a preset course, that the committee's decisions about their pace will remain contingent on its outlook for the labor market and inflation, as well as its assessment of the likely efficacy and cost of such purchases. Again, language we saw in the last Fed statement. She goes on to repeat that the Fed expects to maintain the record low federal funds rate well past the time that unemployment hits that 6.5% threshold, especially if inflation remains below their target. So no change here in the forward guidance. She says the U.S. economy gained more traction in the second half of last year, pointing to the improvement in GDP, the improvement in hiring, also the drop in the unemployment rate since the Fed started its latest round of bond buying. Looking to the future, she says, again, she and her colleagues anticipate that economic activity and employment will expand at a moderate pace this year and next. Unemployment rate will continue to decline toward its longer-run sustainable level, and inflation will move back toward 2% over coming years. And she will go on again to directly mention the turmoil we've seen in financial markets. We've been watching closely the recent volatility in global financial markets. Our sense is that at this stage, these developments do not pose a substantial risk to the U.S. economic outlook, and they're going to continue to monitor the situation. All in all, this testimony could have been written by Ben Bernanke. Sounds an awful lot like Bernanke. Pretty clear words here, easy to understand, and again, no big surprises from Janet Yellen in her first testimony. We'll see how she does in the Q&A.